we are here on the class. So today is the whole reason for this is to talk about, like, with all of this stuff or whatever was going on with the cash offers and everything else. So cash offers are beating out everybody, which I know you guys as real estate agents, you know that. And so this is a program, a loan program, and there's only like 3 brokers in the entire state of Florida that can do this. So to do this particular program. So even if you have another lender that you're using or that your client is pre-approved with, they're not able to use this program unless they come to me. This is a specific program that is with one of my lenders that has asked me to do this with them in order to, you know, help clients and so on and so forth. So what this is a, Laura, how do we progress to the next screen? So what this is a guaranteed cash offer. So a guaranteed cash offer is that they are giving an offer. There is criteria to it. It is a conventional 10% down. So it is a guaranteed cash offer that once they go through these different steps, they're going to have a letter that is a commitment saying that we guarantee closing. And so with this, there is, they get a letter, there's the process. It is a conventional 10% down. And the same guidelines as far as the conventional loan goes. I require a 620. Not everybody requires that. If you go to a bank and so on and so forth, they require sometimes 680, 700, 720, so on and so forth. So this is a 10% down conventional 620. And there is mortgage insurance. This can be on a primary, on a secondary, or an investment home as well. So an investment home is going to be 15% down. Primary, it has to be 10%, and a second home has to be 10% as well. Let me see. Okay. Laura, go to the next screen. I don't know how to progress to the next one. So our story. So with me, I've worked with most of you on this call. I've been in business in this particular, my company that I've got now for over 14 years, been in this industry for a lot longer than that. Was in the mortgage department whenever there was banks in downtown Tampa and the mortgage department, so on and so forth. So my experience is there. I am a broker, so I'm not a bank. I am not a retail bank, for lack of better words. So retail bank is if you walk into a Bank of America, you walk into a Chase, something like that, a Wells Fargo, so on and so forth. They have their one set of rules. With other branches that you have, like there's AmeriFirst, there's a couple of others or whatever. There's ones everywhere. A lot of those are what's called correspondent lenders, and they have, again, one set of guidelines. Since I'm a broker, I have many sets of guidelines. So without even this program, I can do all loan programs or anything with real estate. So that is what I do. Whenever you're dealing with me, you're dealing with myself and my team. Your client doesn't have to say their story all over again, repeatedly. Communication is there. You're checked on once a week. Client is checked on once a week. Everything, the whole process is, we've improved it dramatically over the last couple of years. So, if there's any questions as far as how that works, I can set up a call with you after this or whatever, as far as anything else is concerned. Again, I think I've worked with most of you that's on here. If I haven't, then would love to work with you. But that's who I am. So I am the owner. I am the broker. I do not have other originators at this point because I am very, very, very big on compliance. And if I have an originator that does not have compliance, they come after me. I'm the one that is in trouble with the government and so on and so forth, not just that individual person, because it's my company. So that is about me. I've hired more staff. We've actually got 2 people on staff right now that are Spanish speaking as well. So that helps with those clients. And that's who I am. That's what I'm about.
É, Suarez, que ela tá fazendo o Zoom.
Huh? Say
É,
it again, Paula.
hello?
Yeah, I'm hearing you.
Oh, okay, I'm sorry.
Oh,
On mute. Sorry, let me go. Mute.
yeah, mute yourself. Okay, so the next thing is, Laura, if you go to the next one. So problems we're hearing with cash is problems that we're hearing is cash is king. Clients and buyers are losing out the cash offers repeatedly. Again, you know, got 70 contracts on one client or on one home just in literally a day. Other houses, naturally, I've heard one agent tell me that they were getting somebody offered like over 100 and something thousand over asking price. And that's where buyers are paying over asking price and just making crazy offers, which I'm sure that you're aware of. Next, Laura. So what this is that this is how we're solving the problem. So from telling you that there's a way to duplicate the buying power of a cash offer without having to empty your pockets, that's key. So again, this is 10% down, conventional. So you don't have to, wipe out the retirement, so on and so forth, or whatever, as far as in order to put that cash down. And they're just putting the 10% down. Again, there's mortgage insurance. Again, can be second home, all of the above. With putting 10% down, I know that there is seller concessions are not very behooving right now. If you did do seller concession, if you're putting 10% down, the max is 3%. If you put 10.01%, the max is 6%. So that's just kind of how that works. And let me see, where is my next screen? Go ahead and go to the next screen, Laura. Okay, so guaranteed cash offer. What this is that the client has to be pre-approved. And we do a actual to be determined loan. So I have to have them in underwriting and their loan has to be approved. That is the first step. So pre-approved in order to know if we can go forward. Then the next step is to get them actually get their loan approved with a to be determined address. Once they are approved, then the next steps are to find a property. And so say, for instance, if you're looking to take a client out to 3 properties, so you've narrowed it down to 3 properties or even 2, whatever the case is. So you really like these, you're ready to go, your client is ready to go, all of the above. So you're going to get me the address and we're going to get it into what I call it as an insurance policy. So I get it in and a evaluation is done. Laura, go to the next screen. Evaluation is done to see what we're seeing the value to be. So it's an AVM, and if that comes back, then that's where the guaranteed offer comes in. Now to do this, it is going to be $300 for up to 3 properties. And so what that means is because there is appraisers that are looking at the properties and that are appraisers in the area where the properties are at, and they are looking at the home to see if the value looks like it's going to be around where the list price is or what you're wanting to offer. And so with that, if they see that there's no way that that's going to work or whatever, then it may be that house may be declined as far as giving a guaranteed cash offer. If the value looks like it's going to be there, if the research is done, usually it takes within 24 hours, could be a little bit more, but give or take 24 hours. The better we do the research up front, the better everything is. And with that is whenever you go to put in the contract on the house, you have this guaranteed offer with it. What that means is that the buyer, so let's say, for instance, if the contract price is $300,000, the valuation is done. Yep, we're going to do a guaranteed offer of $300,000. If the value comes in, so that's what the $300 up to 3 properties. So so they're buying in 3 increments, $300 for 3 properties in those kind of increments. Once you put an offer in, and we know that everything is good, the whole process is all the normal process. So what happens is that there is a 1% service fee paid at closing. So if the house is 300,000, then the client, the buyer pays 1% at closing. It is non-refundable, but at closing. The reason why this is done is that that is the guarantee. That's kind of like the insurance policy. So if the contract price is for 300 and the value comes in at 275, then that means that that 1% that they're paying at closing is going to pay for that shortage of 25,000, not the borrower, because that's why we did all of our homework up front and we're able to give this guaranteed cash offer, is that they're paying the 1% at closing for that deficiency if there is one. If there's not a deficiency, they're still paying for that 1% at closing. It's still costing them that 1%, but that 1% is doing several things. It is allowing them to give a guaranteed offer, number one. Number two, if the buyer messes up, like for instance, they go buy a truck, they mess up on their credit, they lose their job, whatever, the house is still going to close. So for the seller, it is a guaranteed closing. For an agent, it is a guaranteed closing. You are still going to get paid. At that point, if the buyer messes up, I'm out, but we're going to, keep on going. That's my downfall on this, but that, it is what it is. And so so let's say, for instance, if that happens, if a client messes up, then you're still going to close on the house. Then you are now able to list that house also for that company, the partnership that we are with. You're able to list that because we've given that cash or that guaranteed offer. You are still closing on that. They become the buyer. Then you're turning around and listing it for them in order to get that off their books as soon as possible. With that, so the 1% is paid at closing. That's the guaranteed offer to make sure that it's, number one, a cash offer. Number two, if there's an appraisal shortage. As far as the escrow, so it's a 10% down conventional. With this program, 5% of the down payment is required to go into escrow. So if the buyer does mess up with their job, with their credit, which is very, very, very seldom, but if they do mess up, they are at risk at losing their 5% escrow deposit. That's not an option because, again, we are still closing. We were still giving a guaranteed offer. And so that is what they're at risk for. So if they don't mess up, then they're fine. If the house does not go through because of an inspection, then that's different. They get their money back. It's all a normal contract. Okay, so that is all normal. The $300 for the valuation is not refundable because we're still doing that valuation up front. The 1% at closing, that's paid at closing. It's not refundable. Once we close, then we close. So that is how that works. And so it all equals an accepted contract, a successful closing, and a home for the buyer. And so the seller's got a sale, guaranteed sale. No matter what happens, they are getting a guaranteed sale. Now, on the same token, that same $300,000 house, if the buyer chooses to go over that price of the guaranteed offer, so if we're saying, okay, the guaranteed amount is $300,000, if the buyer chooses to go over that and offer $320,000, they will come out of pocket with that difference of the $20,000. They chose to go over the guaranteed amount, so that's where that comes into play. Laura, next. So the benefits for the seller, again, closing guaranteed even if the appraisal is short. Closing guaranteed even if the buyer falls through. Benefits for a real estate agent is happy buyer and seller because, again, you had a guaranteed offer. You beat out the cash offers because you were guaranteeing closing. I know Paula just had one that she had a couple of cash offers on a house, and even the cash offers fell through. So, and I've heard of other people with that as well. So cash offers are falling through as well. I don't need to, I'm preaching to the choir for the real estate agents that are on here. Closing is guaranteed even if the buyer falls through. You as the real estate agent, you still get paid. You're getting paid from the seller side. Just as you do normally, it is still a closed transaction. Next, Laura. So your next steps is your pre-approval steps. So for a client, They need to get pre-approved, first of all, just like anything else. I do not issue a pre-qualification. I only issue a pre-approval. So we need to do the application. We need to pull credit. Again, I need a 620 credit score. I have to have the last 30 days of pay stubs and last 2 years of filed tax returns with the W-2s and 1099s to match the returns. It's not an option. This is what I require on every single deal regardless, in order to make sure that I am giving you a good pre-approval. If they're on fixed income, then I have to have their awards letter. If they're VA, I put, well, this isn't VA, this is conventional, but so if they're on pension, retirement, social security, whatever it is, I have to have their awards letter. The longer it takes them to get pre-approved, the longer it's going to take to put in a cash offer. It is what it is. Next, Laura, we're going pretty quick, so we'll open up to questions at the end. So the next steps is the client is to start the application. Then once we've got them pre-approved, we start the loan. We have the loan in as a to be determined property address. Once the loan is approved, start looking for a house. Once you find houses that the client is interested in putting offers in, get my office that address, and so we can get it into the valuation. The client goes into a portal, pays for that $300 so that it's all said and done. And again, that gives them up to 3 homes to get valuations on. If they get an offer on the first one, then great. The 300 is still the 300. Again, it's in increments of 3. Seller, accepted offer, and then we're getting going. So your other benefit is that we're going to close quicker because we already have a loan approval. So the only thing that I need is the house to go along with it. And so that's, your appraisal, you're doing your inspections, title, and insurance. So there's those normal things or whatever, but we've already crossed everything to be in underwriting for the credit side and income, everything else. Again, we just need the house. Next. Here is my information. And so the application for your clients to go straight to the application. I have a domain, yourfinanceperson.com. This takes them straight into the application itself. My website is suarezhomeandfinance.com. That's been the same for, 14, 15 years. The office numbers that are on here, I have a 352 and an 813. I am from Tampa, moved to Hernando County, so I have those numbers. They all go into the same office number. The text is a text only line. And so that is a office text that my staff has access to. So all texts are responded to within an hour. And so if you are going to look at a house with a client, or if a buyer is on this call or whatever, and sees this, whoever it is, you guys can text the address and the amount that you're looking for, so that we can start that valuation process, so that we can get that done. And you go look, you put in a contract with the offer. Beth, you're asking about how much mortgage insurance is. So mortgage insurance is the same as if you're doing a normal. This is a normal conventional loan. So if the scores are higher, depending on what your debt ratio is, so it's your debt ratio. So mortgage insurance for conventional is based on your credit scores, your loan to value, meaning 10% down, and also your debt ratio. So it encumbers all of those, and that's how the rate is determined. A lot of times I will see people's mortgage insurance rate at like 0.44, 0.40, which is very, very minimal. With past clients and also my own financial advisor, it makes more sense to put less money down and keep your money in retirement because that mortgage insurance is low. So it totally makes sense for that. In here on the screen also, the email team at Suarez Home Finance. This way my staff has access to everything so that everybody can get moving quickly. I'm kind of taking off my personal email out of things because people are getting delayed answers because I get just inundated with my lenders, my rate sheets, my everything else, whatever, all day long. So I'm trying to centralize things so that no one gets missed or left behind. So Laura, you can take that off now. So other questions, let me open up the chat. So if you have any other questions, just unmute yourself and ask away. I don't know if there is, let me see. So the insurance, can the buyer purchase another 3 properties for $300 if things don't work for the first 3? So yes, so after they do the first 3, so hopefully they're not going past that. And so if they have, if they put in 3 offers and we do the 3 evaluations, if those 3 offers don't get accepted, then they do another $300 for another 3 properties. And so that just continues. It kind of started in the beginning to be a little bit more costly, but I could not, that's where we did some tweaking on the program. And so it made sense. This is something where, do you, as the real estate agent, do you help them to cover that? So there's different things, and I'm not telling anybody to spend your money at all. It's just something else that I thought about. I don't know if that's something that, is there or whatever, but regardless, it's $300 in increments of 3 properties, 3 valuations. If the first 3 don't work, then we go to $300 for the next 3, for up to the next 3. The mortgage insurance, Tina, yes, it does fall off after the 20%, just like normal. So let's say, for instance, if they're putting in this cash offer or this guaranteed offer, and they've got an existing house that they're going to sell after we close, they can turn around and put principal down and get rid of the mortgage insurance. The only way to use the values increasing is by actually refinancing, unless it's been at a certain amount of time. On conventional, the mortgage insurance, there is not a certain time frame that you have to have it anymore. That's been gone for several years. But you have to have the equity, and the way that the mortgage, or the way that the value does increase, is based on if you've made payments. There's also if you have done upgrades to the house, and you can show that, and so on and so forth. But at closing, the buyer does have a letter that says, here is the steps. And so to get rid of the mortgage insurance on a conventional, it's just as simple as having enough equity there. They have to be current on payments, and they have to request it in writing. If not, and normally there is an appraisal done. The only other way to get rid of mortgage insurance, we have refinanced people to get them out of the mortgage insurance, because at the same time, we're also reducing their interest rates. So that's how that's how you can do that. But it is, again, normal conventional loan. Paula, what would be the best way to educate buyers about the new program and loan to explain 300? So I'm going to actually do a couple of videos on this. I have a YouTube channel. If a lot of you have seen my stuff or whatever, like I didn't post things for probably almost a year, which is crazy, but I'm getting back into doing my videos and doing education and stuff like that. So I will do a couple of videos on this in order to explain the program, so that you can even just share the link with a client and it explains it. So I'll do a couple of videos, one, explaining the $300, all that kind of stuff, and then one explaining the program itself, so that you can educate. You can, I'm going to create a post and you guys can share it if you'd like to. Maybe that will get you guys more clients, which that is the hopes as well, that you're, able to offer this program to your clients and gain more. What is the link that can be shared with clients? I'm going to get that. We're going to get that to all of you by tomorrow morning, so that we can do that. So we'll share the, so Mary Jane, the link for the clients for like explaining the program, or to do like the $300, which one are you talking about?
To explain the program.
Okay, so yeah, that's why I'm going to do a video talking to, going through like what I'm talking about now, but just going through bullet points in, what this is and so on and so forth. So I'll take this presentation, and instead of like, I'll have this Zoom call also just as far as reference, but I will be recording an actual video to where that you guys can share the link and get that to your clients. So that'll be readily available. So I'll have 2 videos as of right now. And my mindset is one to explain the program, and then also a second one just to explain the $300 just a little bit differently, so that is separate, so that they don't have to go through and listen to the whole program again. They can just listen to that part. I like to kind of separate it as well, just if they need to listen to just that. So I will do that. So Beth, if a property does not appraise for the contract buyer, no. So what that is that is the 1%. So if the property does not appraise for contract price, is the buyer still obligated to overpay for the house? So that's where the valuation is done for the 300. So valuation is done. If you guys feel that you're wanting to offer $300 or $300, right? $300,000, then, and the valuation comes back. And so we give a guaranteed letter that for the $300,000, they're putting the 5% into escrow, because again, if they mess up, we've already given a cash or a guaranteed letter. So that guaranteed letter is telling the seller, we're closing come hell or high water. So we are closing whether we close with the buyer because the buyer is set and they're not going to mess up and they're going to do all of what they're supposed to do so we can close. Or if the buyer does mess up, we are still going to close on the seller. We are still going to close for the seller. And that is where, again, that you as the agent, you're still going to get paid. It's still a closing for you, so on and so forth. And it's still a closing for the seller. So if the appraisal comes in short, that's where the client is paying a 1% at closing, which is 1% of 300 is 300,000 or 3,000. So that's where they're paying the 1% at closing. And so if the contract and the guarantee is given for 300,000 and the appraisal comes in at 275, that 1% that they're paying at closing is like that insurance policy where the company, where the partnership that I'm with is paying the $25,000 shortage. So at closing, the buyer is coming, they've already put the 5% escrow, then they're bringing their other 5% to the closing, plus their closing cost, plus the 1%, because they have to have the 1%. And then my partnership is bringing a check or going to be wiring the $25,000 shortage to the title company for that deficiency. Does that make sense to everybody? Or if you want to do a chat or unmute yourself, whichever way works. But that's how it is. So that is the purpose of the guaranteed offer. So even if the value comes in short.
So, because I have buyers that are willing to pay contract price, but if the appraisal is short, then they don't want to pay that gap. Maybe just a certain amount, but sounds like they're still obligated to that, the difference.
No, that's where they're paying the 1%. So they're not going to be obligated to that. So they're putting their offer in at 300. And so if they're willing to pay the 1% in order to not pay for that appraisal shortage is basically the long and short of it. So it's costing you 1% for an insurance policy to not pay an appraisal deficiency. Does that make sense?
Yes and no. I got to wrap my head around that because somebody's paying the difference. So is it coming back on their mortgage? I mean, are they actually paying?
No, that's where the 1% is. And that's why evaluation is done up front. So if my partnership in doing the valuation is doing their part, you may want to put an offer. You may send me an address and say, we want to offer 300 on this house, but I may come back to you and say, yeah, that's not a house that we're willing to do 300,000 on. And so that house would not have a guaranteed offer. And so if the valuation comes back that 300 looks good, but the appraisal comes in short, that's what the 1% is covering. That's why I call it, for lack of better words, for layman's terms, for ease of understanding, that's why I'm calling it like an insurance policy. So you're paying 1% for that insurance policy of not paying a deficiency of an appraisal, but also to give a guaranteed closing offer.
Okay.
Does that make better sense?
Yes. Thank you.
Okay. All right. Any other questions for anybody, or? I think we've answered most of them in the chat. Tina, how do the interest rates compare to other programs? Again, it's a conventional rate. And so let me just show you something really quick, and I use this all the time. Let me do, if I do a share screen, hold on a minute, let me do. So what I do is whenever I am on the phone with a client, and we're talking about interest rates, a client will say, well, I heard on the radio that it was, you know, 3.5, or let's say right now, whatever, as of today, it was 4% interest rate, and so on and so forth. So I'm looking at it and saying, okay, yeah, the interest rates are not 4% right now. And if somebody is giving you that, then there's probably points that they're not telling you about. And whenever you listen to the radio and watch on TV, if you stop it and you pause it and so on and so forth, then you're really going to hear some, you know, then you're going to hear the real story. So a lot of times, most of the time, I can meet or beat other banks and so on and so forth. So I'm going to share my screen and I can tell you where to click. So it's a very, very good tool. Yeah, this is exactly it. So if you click on the 30-year fixed, okay, and then so scroll down just a little bit. I don't know why mine wasn't showing. So here it says conforming 4.375. It's a 30-year mortgage. Click on disclaimers. And this is where it tells you exactly what it is. So this is, again, this is a tool that I've used with clients for years. And so I don't just use this as a tool, but like, for instance, I tell people I was sitting and watching, you know, working on Saturday morning at my desk, the TV came on, you know, whatever popular mortgage company online, whatever is, you know, oh, we can do this with no closing costs, so on and so forth. I stopped the TV, read the fine print, and if you read the fine print, you're going to see all of this kind of stuff. I talk about this kind of stuff up front, but that, like that 2 points, that depends on what your down payment is, what your credit scores are. Your credit scores have everything to do with points. So your points are dictated by your down payment. Your points and rates are dictated by your down payment, by your credit scores, definitely the loan type, but also if it's a single family or a manufactured. Construction rates, those are a little bit higher. I do all construction loans. VA construction is huge right now. I do those. So we do all of the construction loans as far as a true construction, as well as in construction or in loans like Lennar, Inland Homes. I think they're still around. You know, those are production builders, and so those are in loans, which is kind of like what we're talking about now. Which in that sense we can still do an in loan. Okay, Laura, I'm done. So that's, you know, we can still do an in loan on those as well, and we can still use this program. Now with that program, with a builder, you're not going against cash offers. So that's up to you guys. If you think, you as the real estate agent, if you think you need this for a construction, with a production builder or not. But on that topic, I can absolutely beat and save a client money on those builders. Have done it for years, do it over and over again. They do not advertise that they're the lowest rate. They do include the closing cost in their purchase price, which I'm sure you all know. They will allow an outside source. Again, it's, you know, I've closed them to where I've always gotten closing costs from a builder. So that's a different, you know, that's a different topic. And I think I've done some videos on that. So if you got any questions on that. So that is, does anybody have any other questions on the guaranteed offer? Thomas, I don't know if you're still on here or not, just as a client. I think everybody that's left on here from what I see are real estate agents. But if you've got any questions, you know, don't hesitate to call me. My office can set up a time that we can talk. We can do, you know, another Zoom video, or a Zoom call. I do loan consult calls with clients and agents all the time, and it works out very well. It saves your time from running and meeting them. It saves my time from them coming into the office and sitting and going through everything with them. We're all on the same call. We answer all the same questions, or we, you know, answer the questions for everybody. So everybody is on the same page. But again, it has worked out great, and it's something that that I've been doing for just a little bit. So if we need to do that as well, that's another option. So If there is nothing else, then call me, let me know. Let us know who we can help you to get into those offers, and relook at your clients and see, and you look at your sellers as well and see who maybe you can go back to. So if no one has any other questions, then we will end the call, and we'll get the videos and stuff out to you by tomorrow. Is everybody good? Okay, I don't see any other questions. Again, if you have anything, then let me know, and I will talk to you all soon. Have a great day.